Hello, good morning everybody. This is Brian Wagner. I am the Chief Architect of Prodigio RTS, and today we're going to have a Prodigio chat where we talk about an RSI Bollinger Band strategy. Now the goal of today is to, first of all, anyone who's seeing Prodigio for the first time, to give you an overview about what Prodigio and Wizard Lab are, what the system can do, and to get you into the mindset of building rules and building strategies with Prodigio. Today, I'm going to try to kind of get the clockwork moving. This is kind of a very simple idea, a very simple strategy. And the idea is to demonstrate how you can compose various aspects of technical analysis together inside of Prodigio's Wizard Lab in order to create rules and strategies. The goal is to show you how easy this is and to really get you to start thinking, well, if he can do that, I can add this to it, or I can tweak that, etc., etc. So we're going to be talking about this strategy today, but first I want to say welcome everyone. Thanks for joining us today. Prodigio Wizard Lab. What it is the automated trading system offered exclusively by thinkorswim and TD Ameritrade, which allows you to compose strategies using technical analysis and to fully automate or semi-automate those strategies. Now, the unique angle about Wizard Lab is that it is an environment that allows you to build a strategy without scripting anything. That's what's different about it. I can open up, here's an above average volume strategy, and the way that you represent these things in Wizard Lab, the way that you build these things, is you have a series of studies, and you connect these together according to what you want the system to do. So it's a completely drag and drop touch and drag and point and click user interface with no scripting required. All it requires is for you to just get used to the system and to really start to figure out, okay, this is how you do this, this is how you do that. And the nice thing about the way it's presented visually is that you can kind of a la carte every single thing that you would want to do, and it's very easy to add, change, or remove to rules or strategies. So I'll talk about the details in just a moment. First, little housekeeping. Want to invite you all to join us on the web at www.prodigiorts.net. That's where you can keep up to date with the status of the platform, and you can join the forums and ask questions, converse, talk about strategy, build strategy, share strategies, etc. Follow us on Twitter. We are twitter.com/wizardlab. We usually have announcements about what the chats are going to be about, and also anytime we have a major release, we kind of make the announcement. Prodigio is available from thinkorswim. To get Prodigio, you request activation by sending an email into prodigio@thinkorswim.com with the subject line Prodigio activation. Once you get activated, you will get a launcher, which is a button inside of the TOS platform. You click that button and you launch Prodigio, and you can start working with it. Prodigio is directly linked in with your thinkorswim trading account. Now they're doing a lot of work on their back end, so we expect that this will be available for live trading for the TD customers shortly. Right now you can paper money this system with a TD account, and they're working on the back end to expand it to every user. So let's get started here. The idea here is, let's suppose you want to create an automated strategy. And the automated strategy is going to be based on two different technical analysis indicators. Number one is Bollinger Bands, and number two is RSI. Now these are two studies that you can look at on charts, and they're some of the more basic technical analysis. But let me explain for any newcomers what exactly these things tell you. Well, you can see here I've got a chart of the equity tradable fund for the S&P 500 SPY. I'm looking at 5-minute candlesticks on the chart, and I have two studies plotted on this chart. The first study is Bollinger Bands, and I'm looking at a very basic Bollinger Band study. What this does is it creates bands around my price data, and there's three specific bands. The first one is the one in the middle, and this is simply a moving average of the price points that go through the data. So this middle band, it's just going to follow the price of the data. This is a weighted moving average. It's an exponentially weighted moving average, but all it is it's an average price. That's all it is. Bands are plotted above and below the average, and what these bands represent is the volatility. In other words, if these bands widen up, the price action has become relatively volatile. If they tighten up, the price action has stagnated or is in a period of consolidation. You can see this on this chart of yesterday and today's price movements by, you notice as this price moves down, what happens is it shot down very quickly here from 10, let's say about 10 o'clock to 10:40. And when it shot down quickly, these bands widened up. The range expanded so that it's much wider. It came back, but eventually you see what happens in this short period around lunchtime. Trading activity slows down and it begins to consolidate. So these bands begin to tighten up. And all this study is doing is it's measuring this volatility. So it's a good way to make decisions about, should I trade now, should I not trade now, based on the volatility of the price movement. You'll notice there's an interesting phenomenon that happens with Bollinger Bands. Whenever there's gaps in trading, the study sees this as a time where it's very volatile. I mean, this was a gap, relatively speaking, from the previous day to the open. I mean, it's not a huge gap, it's a tiny gap. It's a very, very tiny gap, but it's a gap nonetheless. The Bollinger Band, let's suppose it saw that in the middle of the trading day. Let's say that happened at, say, 10 o'clock in the morning of Eastern Standard Time. If this happened in the middle of the trading day, that would be a really strange event, very volatile, shaky event. And if that happened, the Bollinger Band wouldn't discriminate, and it would say, well, now the volatility range gets very wide. So you get these elliptical patterns on Bollinger Bands when that kind of event happens. But Bollinger Bands are measuring volatility. We're going to use this in order to measure where the price range is with respect to its average range of volatility. So what the heck does that mean? We're just going to pick extreme points in the movements of price, and we're going to use that to our advantage. And we're going to combine this with another study, which is RSI. And you see I have a 10-period RSI plotted at the bottom of my chart. Now an RSI is the relative strength index, and what it measures is basically the up movement to the down movement intrinsic in the price movement. Right? So, okay, what does that mean in plain English? The way RSI works is it's a series of ratios, and it looks at the bars, the OHLC candlesticks, and it looks at the movement, if it goes up or if it goes down, and it crafts a series of ratios, and it creates this oscillator which ranges between 0 and 100, and when the value is low, it's saying that that ratio has been moving downward. The up movements to the down movements have been moving downward in a fashion such that it is trumping the activity that has happened in the past, say, 10 periods. So in other words, we usually use the thresholds of 30% and 70% to mean 30% is an oversold condition and 70% is an overbought condition. Well, the way you understand that mathematically is that when it's above 70%, it means more or less during the last 10 periods, price has been moving up 70% of the time. And more or less, when it's below 30%, price has been moving down 70% of the time, or up 30% of the time. Now, that's not a perfect analogy, but it gives you the idea. That's what it's measuring. Both of these indicators are measuring price movement with respect to where the range should be according to its recent history. And the strategy that we're going to build, and I'm going to show you, I'm going to walk through you all the steps of how you build this in Wizard Lab. The strategy is going to pick optimal price entries based on a market bias. Now, we're going to focus on how to pick those price points because we've explained a lot in the past, some videos about how to identify, if the market's bullish or if the market's bearish. And you can build these into Wizard Lab, and maybe we'll kind of touch on one later, but I'll give you an example. Would you say that in the past, that this week, would you say that the market is generally bullish or generally bearish? Now hopefully that's a layup Because if I were a betting man, I would say generally this week the market is more bearish than bullish. And if you know that the market is generally bearish, you can create a shorting strategy. Or if you know that the market is generally bullish, you can create a long-based strategy, and you can deploy just the bearish strategy or the bullish strategy. It's very easy to do that in Prodigio. All you need to do is go to one of these tabs, RTS Strategies or Trade Optics, and you just select your strategy and you click it, and that activates the strategy based on some list of symbols that it's scanning. So really briefly, for anyone who hasn't seen this system before, the main idea is you create a strategy and you deploy this strategy for either robotic trading or for trade optics scanning. Now, robotic trading is represented by this RTS Strategies tab, and what that does is it runs the strategy on your account, and it's going to automatically buy or sell stocks based on the rules when they trigger. Now, you have control over this. You have risk parameter settings that are available under the settings button, and you can specify things such as, well, only use, say, 1/10 of my buying power and don't allow more than 3 trades on the same stock per day. You can set all of those rules up inside of the risk settings. But this allows you to automatically fire the trading so that you can get in and get out of positions by taking advantage of the robotic system. Now, there's also semi-automation. Semi-automation is when you deploy a strategy to trade optics. Trade optics has a similar panel where you have all your strategies in here, and you can just check them off against a symbol list, and that will start populating your trade optics queue. Now, here's a strategy, tick fade cross short. This was actually left running since last week, and so since I logged into the system, these are the signals that this strategy has identified. While you're running your strategy in trade optics, it will populate this table with the symbols, and you can click on each one of these and it will show you the trading signal on the chart. So according to this strategy, it says go short at this time, which may or may not be a good thing depending on your market bias. So those are the main ideas, and what we're going to do is show you how you build that strategy using the Bollinger Band and the RSI, so that you can deploy them in either trade optics to get your signals, and of course you can act as a final delegate in this decision. If you get your trading signal, you can chart it and you can say, okay, yes, this was a good one, or you can deny. You can say, no, this was a bad signal. This is what we kind of refer to as the semi-automation of trade optics. So here's the idea. We're going to assume in this case that the market is bearish, right? Because the market is generally bearish this week. We're going to take that as an assumption. And we're going to create our trigger of our system, which is going to define when it should short stocks in my symbol list. Now, you can do the exact same thing for the long side, right? Because especially a lot of people who have these IRA accounts, they can't short positions. They can only long positions. There's actually a really elegant solution for that. If you want to, say, invest in an equity tradable fund which is heavily short, you can purchase such securities as SPXU. This is the S&P Ultra Shares short. So this movement should be kind of the opposite of what's happening on the S&P. And you see what happened yesterday? If I look at well, let's look at SPX. What happened at the end of the day yesterday is it began dipping, and then there was a very strong reversal, which ultimately, met too much resistance, and it came back the next day. But you have this strong downward movement, this strong upward movement, till the end of the day on the 9th, and this is the end right here. So it went down and it went up, and I can look at this ETF SPXU, and this did exactly the opposite. It went up and then it went down. So this is really just the opposite, and you can go long on SPXU without having to short anything, and the same strategy would apply. But let's go back to the SPY. I'm going to create this as if you're just going to short the strategy just to illustrate, and you can always tweak it to meet your individual trading needs. What we're going to do in this strategy is we're going to look at the charts, and we're going to generalize some things that happen when stock prices meet extreme points. And if we know that we want to short this stock, what we want to do is we want to short at the highs. So now you can't be perfect on this all the time, but here's the idea. It would have been great to short at the high of this bar, right? It would have been perfect. If you went short on SPY at 117.50, you'd be in the money by $3 on this stock right now, which would be fantastic. Now, you can't pick these high points, but you can create rules based on technical analysis that give you signals within general vicinities of important inflection points in the price movement of the stocks. For example, let's take a look at this upper Bollinger Band down here. Other than that extreme point at the end of the day, if you look backwards in time, the last point that price breached this upper Bollinger Band was right here yesterday at 12 o'clock. Now this high price is 115.46, and what happened when it breached this upper Bollinger Band is that within the relative range, if I look at this relative range that I'm circling with my cursor, you see how I could create lines of support and resistance, just vertical lines, and I'll draw these out here with a drawing, and I want a horizontal line. Right? I'll put one here, and I'll put another one right above it at what I'm perceiving to be the upper end of the channel. And let me make those thicker. I can right-click, extend left, right-click, extend left. I can right-click, I can make it thick, so I get my dialog. Right? I bring this up, I make that very thick. And let's just create a very bright channel. And I can configure this as well. So if I'm focusing at the event that happened at 12 o'clock yesterday, I drew these trend lines. Well, they're not really trend lines, they're really like a channel, to illustrate that during this time, price went high and it went low within this channel, relatively speaking. Now this doesn't always happen, but I want you to focus on the concept, because that's how you extrapolate when you study a chart on technical analysis. You can look for the general concepts, and then you can modify those concepts to find information that you can't see by just looking at the price points. Well, what happened was that at this time, this price was at the upper echelon of that range. It was at the upper end of it. And if you know that you want to short the stock, that is a good price to go in. So you've already made the decision. You know you want to short shares of the stock, and you want to make money. You want to get a profit. You want to cover your commission, etc. I would like to be able to pick these price points that are generally at the upper side of the price movement. So that's what this strategy is going to do. And I want you to notice a couple things here. Number one, the price is above the upper Bollinger Band. Right? We're going to observe that, we're going to notice that, and we're going to kind of jot this down in our mind, and we're going to create a strategy that uses this idea, even if it's not absolutely identical to what I'm seeing on the chart. So let me get rid of these lines. And also, notice what happens with the RSI. Now with this RSI, this is actually a 10-period RSI that I'm looking at. When you use periods of RSI, the periods that you look at make all the difference in the world. And it's really up to taste what you look at, but usually a 10-period RSI on a 5-minute chart is a general timeline that you can look at if you're looking for a good price point within the trading session. Right, so RSI 10, that's the default on our charts. That's generally a good idea of what's going on. And at this point in time, the RSI value, it's within this range. It's at 61%. 61% means it's going up more than it's been going down. Now, it's not at an extreme inflection point, right? And you'll notice that it was kind of consolidating at this time. But you can use this information in order to make an educated decision. And what I mean by that is, if I'm looking for this high point within a channel, I want to make sure my RSI is not below 30. Or I might want to make sure it's not below 50. If it's below 50, that means there's a fair chance that this Bollinger Band is not accurate. So I can confirm the action of price against the Bollinger Band by also looking at RSI. I can check two things in my strategy. I can check to make sure that the price point is near the upper Bollinger Band, and I can also make sure that the RSI movement is not going down. It's not below 50. And those are the two parts that I'm going to use in my strategy. Now notice what I did here, right? I'm using these two studies, but I'm going to look for the price compared to the upper Bollinger Band, and I'm going to look for RSI being not below 50. I'm not looking for RSI to be above 70. I'm just looking that RSI is not bearish, not below 50. That's actually what I'm going to do here. And what that's going to do is it's going to create a system where it finds the trigger point, and it's going to confirm that trigger point by backing it up with a secondary indicator. So I'm not doing a double affirmation where I'm looking for price to be in the upper range of the Bollinger Band and RSI to be above 70. I am looking for an affirmation and a confirmation. I'm going to affirm that price is in the upper range of its Bollinger Band, and I'm going to confirm that the RSI does not disagree in an overly bearish manner. And that's the trigger that I'm going to build in this strategy. So let me walk you through how you would build this, and then we'll talk a little bit about how you could tweak this in order to change the parameters, add more filter conditions, or perhaps add other confirmations, such as building in bullish or bearish trend identification as more confirmation. So let's get started with Wizard Lab. Now here I'm looking at the Wizard Lab tab. And Wizard Lab is a very important component of Prodigio because it allows you to build your strategy. And we're going to build that strategy that affirms prices within the upper range of the Bollinger Band, and number two, confirms that the RSI is not overly bearish. So we're going to start with a blank slate. I'm going to hit new here. And the way that you build this in Rule Builder, in Wizard Lab, it's a series of steps where the first step is Rule Builder. Is on the left-hand side you have a series of studies. And you drag these studies out onto the canvas and you will connect these together. And what this does is it defines how the system should calculate the technical analysis and how it should join those calculations together using logic in order to create signals. So all this is it's a replacement for scripts, and it does technical analysis, math, and you can join these things together by dragging and dropping, and you drag arrows from outputs of one study into the inputs of another study. You connect them together, and this says how the system should generate signals. And this is going to define a scan. That scan is going to be deployed against the symbol list that you set up. And this rule applies to all of those symbols on that list. Now those signals, you have to do something with those signals. Before I had mentioned that you could set up robotic trading, RTS trading, to trade the account automatically, or you could send signals into trade optics. Well, the way that you define what you do with those signals is in built on rules, and it says, what should I do for robotic trading? There's always a scanning rule, and there's one scanning rule, and that's going to be the rule that when it fires and sends a signal, what should I do with it? And you can parameterize what you can do with it. So for example, I can say I want this to be a buy signal or a sell signal. Now buy would be for long positions, sell would be for short positions. And if you wanted it to trade in RTS trading, you could say, well, go in at market or send a limit order, and you can peg the limit order to, say, the bid or the ask or the last price with various offsets, etc. you can define this, and what this does is this is the part of a strategy that will either A, get into positions for robotic trading, or B, issue signals to the trade optics queue. Well, for robotic trading, you also want to be able to attach rules that tell you when to get out of position. And that's where these management panels come into play. Now, there's one panel for add to position that lets you set up rules that have double confirmation. Let's say you want to have a signal that it gets in a position and it goes in at 50% of the amount of shares that you want to get in at. You could add another rule, management add to position, to double down on the position if you want to tier in. For example, you want to get in 100 shares, you want to seek further confirmation, and you want to get in another 100 shares. That's what this management add to position panel is for. Now, perhaps the more intuitive panel is the closed position panel. And what this allows you to do is to assign rules that will only work once the strategy has gotten into position. They'll scan, and if the conditions are met, it's going to get out of the position, fully trading the position, getting in and getting out. And you can also assign stop orders and trailing stop orders to be set as soon as you get into the position. So as soon as the scan fires a signal and gets long or short into a position, you can say tie in a stop order at, say, 1% in with that stock, and this will set up a stop order at 1%, in this case below the entry price, which will be sent as soon as the position gets in. Now, Prodigio also has target orders, and a target order acts as the opposite of a stop. So you can create these systems that have kind of bracket orders where it gets in a position and you can stop at a loss, or you can exit at a target, which we consider exiting at profit. So it's really easy to use, actually. You just drag out rules that you had saved into the various parts and you tweak the parameters, and you save that, and that defines a strategy. Now, just really briefly, Wizard Lab features a backtesting system, and you can take your strategy that you had built and you can run a backtest on that strategy. So here I initiated a backtest. That actually ran a backtest over the past week on this particular strategy, and it showed me my results, and you can chart these results, etc. There's a backtesting system, and then when you're ready, you deploy the strategy to, as I explained before, RTS strategies or trade optics. Let's get back to the rule builder. The rule builder is really the heart and soul of what you can do with Wizard Lab. It lets you define how the signals are generated. So let's create this strategy. You always start with an OHLC source study. Now, source data, that defines the data feed coming into the system. And typically you're looking at chart studies or chart analysis, and you can start with OHLC bars. I'm going to build the strategy that I was talking about on my chart by looking at 5-minute OHLCs. So I'm going to take this OHLC study and I'm going to change the interval to 5-minute bars. And what this means in Wizard Lab is as 5-minute bars come into the system, and this is across all of the symbols on my symbol list, I'm going to do things with this data. This is going to be considered the output, and these are bars. So these bars, they have a whole bunch of values in them. They have an open price, a high price, a low, a close, and it's got volume inside of it too. And I'm going to use these values in order to perform technical analysis. So the first thing I'm going to do is I'm going to look at the Bollinger Band of the 5-minute price chart. And the way I do that is I go into my left-hand panel, I go into technical analysis and scroll down to the Bollinger Band study. So here I've got a study called Bollinger Band, Boll Band, returns of Bollinger Bands, which are formed by adding, subtracting a number of standard deviations to the price smoothed by an SMA function. That's where the Bollinger Band gets its bands from. It calculates standard deviation, which is, it's a very simple math formula which measures intrinsic volatility. So it's a really great technical indicator in order to determine what the recent range of price is. So let's drag out a Bollinger Band, And a Bollinger Band is a study that needs an input. So we're going to send OHLCs into the Bollinger Band by dragging the output into the input. And what I'm doing here is by holding down my mouse cursor, it lets me draw an arrow, and I can plug this into any study that receives the same kind of output. So you see this pound sign, that means numerical output, numerical input. I can send numerical output into any other study that needs numerical input. So I'll give you an example of, well, this is an example of that situation, but what I'm doing here is I actually want to compare price against the upper Bollinger Band. And it's that upper Bollinger Band that I care about. So in order to do that, there are studies called adapters. And adapters are used to interpret the data differently. So a Bollinger Band. If I look at this on a chart, Bollinger Band has 3 bands on it. The upper band, the middle band, and the lower band. Well, this study actually has 3 values. If I hover my mouse cursor, this is the forming bar right here, and these are the forming values. You see my Bollinger Bands, it's got moving average, 113.77, up, 114.66, down, 112.89. Those are 3 distinct values, and I can access any one of those distinct values by using an adapter on my Bollinger Band. By default, it will use the moving average, the middle band. But if I want the upper band, I can go into my Wizard Lab, scroll down into adapters, and use an upper adapter. This upper adapter will say, interpret the Bollinger Band to use the upper band. And I'm going to use this upper band in a comparison. So let's do this comparison now. I'm going to compare this against price. In order to do that, I'm going to drag out another OHLC study, and I'm going to change the interval to 5 minutes. And the question that I'm going to ask is, let me know, well actually let's take a look at the chart one more time. Sometimes the price is breaking out and it's really moving up through the Bollinger Band. We don't want to get signals when that happens. We actually want to get signals when price returns back down below the upper Bollinger Band. So let's focus in on this example here, and I'll show you how I want to tweak it. I actually want to know when price comes back down below that upper Bollinger Band. So in order to do that, I want to look at this high price. And let's do that first. I mentioned that we have these adapters, and I also mentioned that OHLC has a lot of values in it. It's got open, high, low, close in the volume. I can use a high adapter on the OHLC. That's going to give me the high price from the OHLC. And the question I want to ask is, tell me when the high price crosses back down below the upper Bollinger Band. Right? So the question I'm asking is, tell me when this price right here, this high price, which I'll read, it's 115.46, tell me when that crosses back below the upper Bollinger Band. Well, the way that you do that in Wizard Lab is you have a series of logical operators. And you have crossing operators, which tell you how things cross above and cross below. Right, so here we go. We've got a cross below here. Right, I'm going to drag this output into the cross below. And what this is defining is how the this tells me it fires signals whenever the high price crosses below the upper Bollinger Band. And I want to tweak this one more time. And this gets back to something that I was talking about a little bit earlier. You always want to take these strategies and you want to think about the underlying concepts. In other words, you really don't ever want to look at a chart on technical analysis and try to generalize oscillators or to try to generalize technical analysis without understanding what it's actually doing. You always want to understand what the study is measuring so that you can tweak this parameter and get realistic results out of something that shows you situations that have value. Long story short, I know that I'm targeting these relative maximums. I want these peaks. And just because price goes up above this upper Bollinger Band, that's not necessarily a peak. Not necessarily. I could probably find a lot of examples. If I scroll back far enough. And I want you to take a close look at this example right here. Right? This is on the 8th at 11:10. And this price movement obviously, it's very bearish, especially if you extrapolate backwards past the prior day. Right? So for example, this is a very bearish move, but price bounces back up above the Bollinger Band. That is not necessarily what you're looking for. It may be, it may not be. But I want you to take a look at this RSI. This RSI is negative. It's not negative, it's below 50%. It's at 49%. And this return back up to the upper echelon of the Bollinger Band, that may not be enough in order to trust an automated signal. You might need more confirmation. So you don't want to create a system that only looks at a couple of oscillators, finds out when A crosses B, etc., and only rely on those signals. You want it to be more intelligent than that. And you want to understand that a Bollinger Band is a range, and an RSI is an oscillator which measures overbought and oversold conditions. And that by joining the two together, you're increasing the value of those signals by finding more selective signals. And well, actually, here's a great example. Here's where the price crosses above, right, and then crosses back below the upper Bollinger Band, and the RSI says, well, at this moment in the past 50 minutes, this is much too overbought to trust that it's going to continue. And it actually, because we know that it's a bearish market, this is a perfect automated signal right here. I would much rather take the short here at this time than to trust the short here. It would have ended out being a great signal, but this could be the beginning of an honest reversal. Now, I mean, if you know what's going on, economically speaking, that statement's not very accurate. But if you look at these things over the long run, my point is I would trust this signal right here much more than I would trust this signal. And the difference is because I'm applying my understanding of the signals in order to combine these things together and filter out signals that are of lower quality. So always keep that in the back of your mind, that you want to take these ideas and you want to run with them. You want to take this concept and you want to say, well, wait a minute, I'm a CCI trader guy. I know how to trade CCI movement. I want to use that as a third filter onto this. And I also know how to trade patterns or to trade pivots, etc. You can take all of these things together and combine them in Wizard Lab. And my goal here is to show you how you do this, and hopefully to give you some trading ideas as well. But I'm going to take this cross below, and this is going to give me a signal for part A of my strategy. Right? So for the first part of this, and this is why I see a question here: why do I have two OHLCs? So that I can separate the logic. Cross below. I have to tell cross below what inputs I want to cross. In order to keep everything simple and separate, you have two different branches coming into the cross below. The one says I'm looking at the high price of 5-minute bars, telling me when those cross below the upper Bollinger Band of 5-minute bars. And so this is signal A of the strategy. I want to combine this with the filter that makes sure RSI is not overly bearish. And I'm going to start by just using a 50% threshold. And then I'm going to tweak it actually, because I want to illustrate my point about tweaking it. So what I'm going to do here is I'm going to go into my logical operators, right? And I'm going to say AND. Now you'll use AND a lot. You'll use AND to join a lot of conditions together. And I'm basically saying I want the high price to cross below the upper Bollinger Band, and I want one more filter condition. I want to make sure that my RSI is greater than 50%. In other words, it's not overly bearish. So let's go to the studies on the left. I'll grab an OHLC and I'll change this interval to 5 minutes, and I want to be looking at an RSI value. Right? So I'll scroll down and I'll go into my RSI indicators. Right? I'll change this down to 10 periods to match my chart, and what this represents is my RSI value. And I just want to make sure that this is greater than, and this is really to taste. When you have a lot of these oscillators, they usually have a lot of decimal points, and it doesn't matter a whole lot if you use greater than or equal to. So I'm used to using greater than, so I'm just going to use greater than in this case. But you can use greater than or equal to. It makes a very small difference. And in order to compare this against the 50%, I'm going to take a constant operator. I'm going to set the value to 50, and I'm going to put that in as input B of the greater than operator. And what this does is it's going to give me signals, yes or no signals, when the 10-period RSI is greater than 50. It's going to say yes it is if it's greater than 50. It's going to say no it's not if it's less than 50. And I can join this in with the AND. And what this does is it creates a filter so that this AND signal, which is the composition of this above trigger, which is the high price cross below the upper Bollinger Band, it's going to combine this trigger with the filter of RSI being greater than 50. And if these two things are true at the same time, that's going to fire a signal. And the way that I end this rule is I go into the trade actions, I take the signal study, and notice this has an input but no output. What that means is this is the last and final rule or study in my rule which ends the rule, and I can save this and give it a name. I can call this RSI Bollinger Band signal. Usually you should type in a description here, but when I save this it says yes, my rule is valid. And if I collapse this and I can actually zoom out, I can take a look, a bird's eye view of the rule, and this is my whole rule which is going to answer that question. It will fire signals when price crosses down below the upper Bollinger Band and my RSI is not overly bearish. Right, so I can take this, and what I'll do here, let's see here. What I can do is I can go into step 2 in the strategy builder, right? And let's create a new strategy. And I want to demonstrate these signals in the back test because I want to get you used to running the back test in order to see where the signals are firing. So let me scroll down here into the, let's see, I save this as RSI Bollinger Band signal. I'm going to go over from my scanning rules. Now all the rules that I save are going to show up in this scanning section and the management section. You need to drag scanning rules from the scanning section, and you need to drag management rules from this management section. So I'm going to do something where I'm going to create a strategy using that rule that I had just saved. And right now I'm just going to say go in at market. And I'm going to do this. I'm going to add a stop order. So I went from order rules and I dragged an order here, a stop order. And I'm going to set the parameters to a 0% offset. And what this will do is it'll get out of the position as soon as it gets in. I'm going to save this as RSI Bollinger Band. What did I call the signal? So I'll give the strategy the exact same name. And I'm going to run this against the I'm going to run this against the SPY. Oh, and I did one more thing wrong. I actually want to short the SPY. So I'm going to change this from buy to sell. That's my trade side. Right? And I can save this. And I'm going to run that. And what that's going to do is that's going to run these signals on that one symbol, the SPY. And I can click any one of these, and it's going to show me when these signals are coming. Right? So let's take a look at these signals here. I've got, now just by looking at the initial signals on my on my chart here. I've got a signal here, and a signal here. Right? Now, this signal right here, that's not so bad. This signal right here, that's not so bad. I don't like this signal right here because that's actually giving me the signal while it's still above, the high price is still above the Bollinger Band. And what actually happened here was that it's actually looking at the closing price crossing back down below. This signal is happening because the high price is breaching the Bollinger Band, but the close price is coming back down below. And I actually have my thresholds of 2. Right? So I can tweak this. I can go back and look at my Wizard Lab, go to my rule builder. Right? And the thing that I... this is correct. It is looking at the high price. But I'm looking at a 2-period Bollinger Band. And this goes back to what I was originally saying. I want to actually tweak this a little bit. I want to tweak this to make the band a little bit tighter. And the reason why I want to make it a little bit tighter is because, number one, Bollinger Band with offsets of 2, right, is usually pretty far. And you can change these parameters however you want. If I change these to something a little bit closer, and let's say instead of 2, I'm going to try 1.6. Right, so I set this up here, right, and by specifying 1.6, I made these a little bit tighter. And actually, instead of greater than 50%, I don't like this signal at all. So I'm going to make this RSI a little bit stronger. I'm going to make this about 65%. And I'm going to try to capitalize on some of these signals. And 65%, well, that might be a little bit too much. But I'm going to make these changes. I'm going to show you how easy it is to make these changes. Right, so let's go to the Bollinger Band. I can change this to 1.6 by changing the multiplier value. Let me zoom back in. And I can change this constant to a value of, let's say, 65. If I hit save, that saves the change to the rule, and I don't have to make a change to the strategy. I can go back into backtest, and I can run this again, and I'll get a different set of signals. Now, this ruled out a lot of those signals. So what that's saying is, perhaps for what I'm trying to do for illustrative purposes, maybe that's too tight, but you can begin to see I get much less signals, but these signals are of higher quality. So how I want to deploy this strategy, or the parameters of the rules, is the trade-off between the quality of the signals and the quantity of the signals. So you notice I've got a very high quality signal, and if I had held a short at this position into the next day, this would have been pretty good. I know that things have not changed in the markets fundamentally, since Monday, and I know that perhaps this is a little bit overbought for the price action that's been happening over the past couple of days. You'll notice this price action has been very bearish, and there are periods where perhaps it's been relatively overbought. You can see back here that happened. Over here it kind of, well, I mean, I don't want to go back too far because now, I start to talk about the economics, and a lot of things have been happening lately. But hopefully you can see what I'm doing here from a technical perspective and try to take this idea and tweak it to taste or to the particulars of your actual trading strategy. And so let me loosen that up one more time. Instead of 65, let me change this to 60. Because remember, my goal was not to be extremely overbought. It was to use it as a filtering condition. So let's say 58. And here's my point about tweaking parameters. I have 70% as a general threshold for being overbought. I also know that 50% is right in the middle. And I knew that I wanted something around 60%. By changing it to 58%, I'm kind of adding levels of tolerance into the values. And 50%, it's a weird number, but I built some intelligence into that number by saying I'm close to 60, but I'm a little bit below it. Right? So I tweaked that to 58, and I did the same thing with the Bollinger Band here. I tightened it up to be at about 1.6, which lets my Bollinger Bands be a little bit tighter so that price can come back through that Bollinger Band more frequently. So I save that, and if I run that again, I should get more signals, and I do. So now I've got something which is a little bit of a compromise. So from those last two runs, I've got compromise signals, and now I'm starting to see something that I could really make something out of. You see these two signals right here. This is a really great signal, because I could either take the really quick play or I could have been in position and stayed in position. And this is also a really great signal as well because it happens to catch this break in the price action from day to day. This is how in Wizard Lab you can create a system based on technical analysis from a chart, tweak those parameters, and create something which is very intelligent, giving you signals of value. Now I mentioned that I would talk about how you could build in the overall trend. Now there's a lot of things that you could do to build in overall trend, but let's take something very simple. I'll look at the chart, right? And I'll look at these daily values. Now obviously this trend is highly bearish, right? Now I'll uncheck historical mode to clear those signals. Historical mode lets you go back further in time when you do back tests. So if you're looking at a chart and you want to go back to current and updating bars, so you could always uncheck this historical mode. One way to determine whether or not the market is overly bullish and overly bearish is you can look at the major indices and you can make generalizations about their movement. And there's a couple things you can do. In the past I've mentioned looking at linear regression lines. You can look at things such as pivot points, or I think one of the other things I was talking about was it was related to standard deviation. I think I kind of decomposed that into some mathematics. But check out the video archives on the website because we talk about some strategies for bullish and bearish momentum. But what I'm going to do here is I'm going to look for something very simple. I've been looking at Bollinger Bands, and I'm going to look for something that's in the lower range of my Bollinger Band. And if it's in the lower range of my Bollinger Band on the daily bars, right, it's going to, I'm going to say it's bullish or bearish. So let me show you how you would do that in Wizard Lab. Now you can also take these rules and you can save them, you can create hybrid rules, etc., and you can reuse these rules within other rules. So you can always nest these things together inside the My Rules. It's not hard to do that, but I'll save that for another time. And I'll just add to this one that I've been working on. I'm going to add one more condition that's going to make sure that I'm bearish. So what I'll do is I'll go to my studies and I'm going to add another logical operator. If I scroll to the right, I can add this AND into this one. And what I'm doing is I'm adding another AND condition. And so I've got this input B, and I'm going to define input B based on the daily bars. All right, so let's take a look at this OHLC study here. I'm going to start with an OHLC daily. Right, and I'm going to look at Bollinger Band. So it's going to be very similar to what I did up here. And I'm going to look at Bollinger Band. You can also right-click on these things and copy, and I can paste. And that'll paste in another copy of the Bollinger Band. And what I'm doing is I'm creating another version of the Bollinger Band strategy based on daily bars. And I'm going to make sure that it's bearish. So instead of the upper, I want to take a look at a lower adapter. And then I'm going to have to ask myself, what do I want to do with this? Well, I want to make sure that the price range is near its lower Bollinger Band range. So I can actually move this down, and I'll continue looking at daily bars. So I'll go up, I'll grab another OHLC, and I want to make sure that this is less than the lower band. And I'll show you one more tweak I'm going to do to it. So I'll go to my logical operators, I'll take a less than, and that's going to be all. And let me zoom out and explain this a little bit. So you see what I added was just this small branch. And it's a little hard to see when I zoom out here because we run these at a kind of a low resolution, these chats, just to make sure that everybody can see everything. So I have this lower filtering condition, right? This lower branch, right? And let me zoom down. And this, it's going to be true when the close price is below the lower Bollinger Band. And I want to tighten this up, actually. I want to make this very, very, very thin because I want to give myself a lot of play. Let me show you what that does. Let me change this to 1.2 instead of 1.6. That's going to give me a lot of play. You see how these prices are all below the lower Bollinger Band? Right, and here it's not quite, the close is not quite below it. That actually gives me some play in whether something is considered bullish or bearish. If I tighten these Bollinger Bands up, it increases my range. Right? So we're shorting. I actually want to make sure that the price is below it on my dailies, because remember, this is the daily bars. I'm combining information about the daily bars with information about the intraday 5-minute bars. And let's save that, and let's run that, and let's see if we get any of these signals the same. Okay, so that's good. So when I chart these signals, I get more or less very similar signals, but I have added the extra condition that makes sure I'm generally bearish so that these signals are of good quality. And this is only one way that you can look for generally bullish or generally bearish markets. There's many other ways, in particular the studies that look at linear regression. And there's some other chats that talk about linear regression, but it's a very valuable tool because what linear regression is it is a mathematically best fit line drawn through a series of data points. So if I go all the way out to today, you see how the price action of today has been consolidating, even though the moves on the S&P 500 are bearish. If I look at these indices, you see how the SPX is down 3%? Well, that's because it's down 3% off of yesterday's closing. But what happened, if you look at the actual trading today, it's very consolidated compared to what's been happening over the past couple of weeks. If I were to draw a linear regression line through today's data, it would look something like this. I could draw a trend line, and it's going to be a best fit line through the data points. All right, so let me highlight this. I'm just going to make it thicker. See this thick cyan line? That would be a linear regression line through today's data points. And my point is it's relatively flat. This is a very valuable mathematical tool which is available in Wizard Lab under technical analysis, which you can use in order to determine trend. And that's right here under technical analysis in linear regression. And the way that you work with this is linear regression slope. And we'll probably have another chat where we review the concepts of linear regression slope, but it's very useful, and if you look at those prior chats, you can use it to your advantage. So with that said, I'm going to actually wrap up today's chat by saying I hope that some people learn some things, especially those seeing the system for the first time. I also hope that I gave you some ideas about ways that you can create systems that have filter conditions and look at more than one technical analysis indicator. You can use this system to do some very powerful things and to easily find and tweak strategies that allow you to find signals by just combining some very simple ideas together. So I hope this gets you started, and I hope that if you've been using the system for a while, that maybe you got a couple tips based on the way that I think about these things in terms of using negative filters. Right, so the real key, if you're an advanced Prodigio user, is to think about what I was talking about with affirmation and confirmation, particularly the inverse of confirmation. Think about that. With that said, join us here every week. My name is Brian Wagner. I'm the Chief Architect of Prodigio RTS. We have these chats every week, 12 o'clock Eastern, 11 o'clock Central. And join us on the web, www.prodigiorts.net. Follow us on Twitter, twitter.com/wizardlab. I'll post this strategy out to the blog. You can find a blog entry on prodigiorts.net. And with that said, I wish you all great trading, and see you guys next week. Take care, everyone.